Good afternoon, ladies and gentlemen, and welcome to yet another edition brought to you by Mahindra Insurance Brokers Limited. Our today's session is focusing on a rather interesting topic, which we always hear about a lot, but unfortunately, the call to action is not as much. Today, we are discussing employee infidelity and commercial crime insurance. Uh, by virtue of doing a lot of events, even as a presenter, I am saying this with a lot of conviction that we don't really get an opportunity to speak about such offbeat topics. When we look at white collar crime, it is evident that the growth is alarming. And more often than not, companies do not consider this as a potential threat. People that commit such crimes often have a lot of awareness around their colleagues, the way the organizations are structured in terms of hierarchy, their peers, the technology which the company uses, their area of expertise, the disciplines, and so on and so forth. So, in a sense, these are people who are generally very well placed in their companies and are in powerful positions making decisions. Now, in reality, most of these crimes cannot be committed by the mid management. So, usually, and of course, there will be exceptions to the norm, but usually these crimes are committed by senior members of staff who are in a position of power and are generally trusted not only by their colleagues but also by their boards and managements. Statistically, we know that such crimes are most commonly detected in larger organizations, engaging in a wide variety of businesses. People indulging in such acts, continue to do so over prolonged periods of time, and hence the damage which is caused in most cases becomes irreversible. I'm just going to take some examples. We could go back to 1980s and recall the Harshad Mehta securities fraud. We could talk about the Satyam scandal, the Ketan Parekh security scam, the Sarda chit fund case, the 2G scam also comes to mind. So these are some examples, and we all know the magnitude of damage that they did uh, to the society at large, and not only to those organizations, but the stakeholder trust is also broken into bits and pieces. Contrary to ordinary crimes, white collar crimes are difficult to detect. Since the people who are committing these crimes are usually senior employees, as we just discussed, they've got significant knowledge of how their companies are operating. They know what the boards are thinking, and hence, more often than not, they get away with a lot. And because these are people who are generally senior, they are most trusted in their organizations, and these crimes are committed, well, I would suppose, out of greed, and are generally very well planned and executed with the help of thorough professionals. White collar crimes cause, of course, immense damage to a company. It can, destroy your reputation. It can take you down to the cleaners as far as your financial position is concerned, if caught, and the losses are immense. Now, besides our usual acts, like we could name bribery, we could touch upon perjury, we could talk about tax violations or misappropriation of funds and breach of trust. These crimes also now include cybercrime, and healthcare fraud is also gaining momentum wrongfully, though. The magnitude of such acts is so immense that a single scam can damage a business forever. And sometimes, even the government and the general population at large is impacted. People conduct white collar crimes for financial gains. Obviously, that's a given, resulting in, say, you know, the reputational loss of a company is something which we spoke about, but also, where it hurts the most, and that's the financial bit. So, a commercial crime insurance policy offers comprehensively covers and protects the organization against such acts, which could be caused due to, say, forgery or theft or cybercrime, etc. And in the event of a commercial crime, a solid insurance cover will not only safeguard the policyholder against losses and damages, but also ensure that your business continuity is not impacted. On that note, ladies and gentlemen, I've tried to set the context for today's session. I would request Vaishakhi Shah, who's a senior partner with Mahindra Insurance Brokers Limited, to please give us a 15-minute introduction as to how the landscape of employee infidelity and commercial crime is changing, or has changed, or how will it continue to change in the near future. And once Vaishakhi finishes, we will bring in our next set of panelists for our panel discussion, which also will be moderated by Vaishakhi. Ma'am, over to you.
Thank you, Shantanu. Thank you so much for setting up the contest. And I will just introduce myself. I'm Vaishakhi Shah. I'm heading liability vertical in Mahindra Insurance Brokers. I have had more than 15 years of experience in liability line of business. And I have seen, as Shantanu was mentioning about white collar crimes. So the so-called white collar crimes basically means that the employees who are at the helm of the affair, they know the practices, they know the policies internally, and they get into such malicious or wrongful act or fraudulent act, and because of the fraud committed by such employees, the organization suffers financial loss. So why it is gaining momentum, I will just give you a brief on that. So we have seen that in last 2 years of pandemic, there are a lot of changes that companies have adapted. There is not only economical or financial, but there are changes environmentally, geopolitical, environment is changing. There are social factors which give rise to such risk landscape. And when we talk about white collar crime, it is nothing but the fraud committed by an elite class of people during the course of their employment. And these employees who are committing such frauds, they have actually better control and understanding of the technology the company is using, or the controls that are there in place. In spite of having robust SOPs or auditing accounting controls in place, the employees who are the weakest link for such frauds, they somehow tend to find a loophole or a vulnerability in the system. They use that vulnerability to cause financial loss to the organization. Now, which are the sectors or industries where we have seen such employee fraud very commonly? So, before the pandemic, to be very honest, most of us were thinking that okay, financial institutions such as bank or mutual fund or insurance companies are some of the organizations, or stockbrokers, where the employee will be managing the payment details also, and they will manage the transactions also. That is where the frauds will be committed the most. But the pandemic has changed the scenario completely. We have seen that this kind of frauds are very common in e-commerce, education, healthcare, hospitality, and manufacturing. Manufacturing sector is nowadays hit the most by such employee fraud or external frauds. Even ITITS company is not or a sector as a whole, they are also not far behind. Since the profile of fraudsters have changed in last few years, we have seen that traditional frauds such as embezzlement of cash or stealing of petty cash has now become outdated, and it has been partially replaced by technology driven frauds. So when we say technology driven frauds, to give an example of Cosmos Bank, what happened with Cosmos Bank was a classic example of use of technology by fraudsters who were third party, were not part of the organization, but they, through unauthorized access, they changed the proxy switch and they could divert the flow of funds from the company's account to their respective accounts. And it happened over a weekend, where Cosmos Bank had suffered losses close to 92 crores, which is a very big quantum of loss. And the policy which we are going to talk about will also take care of some of these frauds. Okay, so during pandemic, as we all are aware, organizations have easily or with great difficulty, some of them definitely with great difficulty, have adapted to digital platforms. And you would, as an organization, you would have stringent, SOPs in place internally. You would have multi-factor or two-factor authentication for any payment which has to be processed, but the pandemic has completely changed the scene. And now we have seen that in spite of having such measures in place, when there is a hybrid culture or remote operations are involved, at times organizations are not able to adhere to such stringent, SOPs in place, and they are compelled to take deviation for some of the transactions which take place. And therefore, organizations also face challenges in preventing such frauds. Not that all organizations are facing the frauds, but it takes place at a very smaller pace. Maybe let's say an employee, instead of making payment to vendor A, connives with vendor B, opens a dummy account and diverts the funds to that dummy account. And it all starts with a very small amount, like let's say 1,000 rupees or 10,000 rupees. And as and when going forward, they gain comfort, they gain confidence, they start embezzling in a big way. And ultimately, over a period of 2 to 3 years, we have experienced that some of the organizations, they've suffered losses massively. It has gone to the extent of 30-40 crore. And one of such case where CBI itself was involved. It was a fraud done by employees in connivance with some of the borrowers for a collateral management company, where the losses were losses mounted up to 40 crore. And CBI, there was CBI investigation. The premises where, or the location where this fraud took place, it was completely sealed. And even the none of the employees or the senior colleagues of that organization were allowed to go and visit that particular location. Now, what happens when such high magnitude losses take place internally? What happens to that organization? What happens to the business of that organization? And moreover, the goodwill of that organization? Because ultimately, everything will bring in, action against the senior management, the board members, and that is where it is important, and it is critical to take charge fully and to have proper preventive mechanisms in place. If we have proper preventive mechanisms in place, then even for a listed entity, when such crisis situation arises, even the regulators, they will mellow down to a certain extent, because the organization internally has strong corporate governance. The SOPs are stringent. There is employee training which is provided on day to day or on regular basis, where the employees are made aware of consequences of such frauds which may take place internally. And as we discussed, growing interdependency also, poses a big threat. So now we have seen that any transaction to take place with vendor or client or suppliers, everything has switched to technology. We are all very, comfortable. At the click of a button, we get into RTGS and EFT transactions, not only at personal levels but also at corporate levels. So there were times, before pandemic, where as an insurance industry, we used to look forward to check payments. So even in 2019, till 2019, we used to get payments for premium from our clients in check. And we used to go collect the physical check. We used to go and deposit or submit this physical copy of the check to insurance companies, then they will deposit in bank, and that is how the mode of transaction used to take place. Thanks to pandemic, gone are the days where check transactions are taking place. In, I would say, out of 100%, hardly 1 or 2% of the cases we have seen of late where the check transactions are taking place. Everywhere we are talking about online payment, we are talking about UTR details, we are talking about NEFT details with our clients. And that has only given rise to new predators which are quickly growing in strength and effectiveness. Majority of the organizations experienced that the most disruptive incidents came via external factors in collusion with internal factors. So when we talk about external factors, as we discussed, instead of making payment to vendor A, it goes to vendor B. There are cases where we have seen that organizations have lost big way. Even at manufacturing location, we have seen that some of the employees, group of employees, they connive with a scrap dealer or they connive with a particular supplier and they start embezzling, funds or scrap, and it only creates a dent to the organization's balance sheet. Okay. And any employee who is involved in such transaction or fraudulent transaction, they are well aware that for any organization it is very difficult to have control over external factors. Let's say there is an employee involvement is there, we are not able to identify an employee internally, but at least we know that there is someone internal who is part of this fraud or who has committed this fraud. We will definitely get into swung into action and we will try to find out the root cause. But when there are external parties or external factors involved or external fraudsters which are involved, it is very difficult for an company or an organization to identify the root cause. Like you would have thousands of vendors or suppliers registered with you. How would even an organization identify that out of these hundreds or thousands vendors or suppliers registered with them, which one is fraudulent or which one would have fraudulent intention? So we had such classic case of one of the manufacturing company where the accounts team, they received a mail appeared to have come from one of their vendors. Now that organization is into business of manufacturing for more than 50 years now, and of course they would have some of the vendors or suppliers or even for that matter clients also with whom they would have long standing relationship. So with this particular vendor they had a relationship for more than 20 years. They were so comfortable and confident with that vendor that even the vendor raises an invoice, the accounts team was confident that it will not be fraudulent because that was the history or record of that particular vendor in that particular business. So now what happened that vendor that particular vendor was not aware that this particular fraud is taking place. An external party, an intruder in the system, they got neck of it that this is the email id of a vendor, this is how the mails are being exchanged, this is the trail of communication. Through that unauthorized access they got access to all this information. What they did, they created an email id very close with very minute difference of a dot here and there appear to be similar to that particular vendor, and they started communicating with our insured, that is manufacturing company in India. They started raising invoices, and over a period of time they could embezzle close to a crore of rupees. And it was the bank which thought that or which could feel suspicious activity. They reached out to our client manufacturing company and they alerted them. They immediately gave an order of stop payment, but before they could actually do that or implement that, they'd lost money big way. Now this is not a case of, let's say, a simple transaction which is diverted to any other account. This is a case of email spoofing or impersonation or social engineering. So there are various terms which are being used for such kind of frauds. So it is very easy, and most of the manufacturing company with whoever we are discussing this kind of frauds, they have acknowledged that at some or the other point in time in last 2 to 3 years they've seen rise in such kind of communications which are being received. So we were discussing day before yesterday with one of our clients where they've experienced this kind of communications which are being received by their accounts team, and the only way out is to reach back to your vendor or your client or supplier from whom you feel that the communication has come. Reach back to them, ask them whether the communication was sent by them, whether it was an authentic communication sent by them, whether they really need or they really require us to change the account details in our records, and whether they really want us to start transactions in that new account. And the best way is to get a copy of cancel check, get RTGS, NEFT details, and then put it in the system, and then go ahead with that. So these are some of the examples of external frauds. Now, when we are talking about internal frauds and external frauds, let's understand what is the difference also between internal frauds and external frauds. Now, internal fraud is the fraud committed by an employee on their own or in connivance with third party, wherein wherein the frauds which includes payroll fraud, procurement fraud, credit card fraud. So we had one other classic case where these are the days where we did not have OTP or PIN to use our credit cards. So one of the employees, that employee was disgruntled for whatsoever reason. He was not uh, you know uh, uh, he could not avail promotion for that particular year. So what he did, he was with his boss. His boss was using corporate credit card. He memorized the details of the corporate card, that is the card number. He actually went home. He used this particular corporate credit card, which was in the name of his boss, to book tickets, air tickets, or hotels. And like this, he used this corporate credit card for number of months. And end of the situation, we came across embezzlement of 50 lakhs. Now, 50 lakhs is not a small amount for any organization. It actually disrupts our funds rotation. So these are some of the examples of internal fraud. Now, risk of internal fraud is much higher for businesses where internal controls are significantly lower or not as stringent as large organizations. So when we look at listed entities, because of corporate governance, because of their obligations to SEBI, they would require to have certain SOPs in place. But when we look at some small time manufacturers or some particular segment or sector, where we have seen that uh, the sector or segment itself is not very regulated, or it is not it is a common norm to just walk in and give your bank details and they will just do the transaction. So these are some of the common problems which we have seen. So it is important to understand also that where do we stand in terms of internal control, whether we are really required to strengthen our internal controls, whether we are really required to have proper compliances in place, proper authentications in place for doing transactions. And this internal frauds can have devastating effect or impact on businesses, and it can last for longer duration than we envisage. In fact, some of the organizations, small time organizations, we have seen that they've suffered heavy losses before actually they could detect the loss frauds also. And as we discussed, smaller businesses can experience severe repercussions, and they have, because they have limited resources. Now, it is very critical for smaller businesses to allocate resources for creating and enforcing such environment for robust internal controls. Now, what are external frauds? As we discussed, there is any pure third party who is involved in such external frauds. Let's say your credit card details are compromised not because of a cyber attack but because of unauthorized access, and a third party, pure third party, is using your credit card details. They are actually able to divert the SMSs or OTPs also by SIM card cloning or SIM swapping, and they are able to use your corporate credit card. So here we are talking about losses suffered by organizations, not as an individual. So these external fraudsters, are we have seen that most of the cases arises because of supply chain involvement. Now, supply chain exposure or risk is very complex, and that also plays a major role or a vital role in such frauds. There are multiple transactions taking place in an organization on daily basis, such as with supplier, vendors, as we discussed, payments to customers, transactions, reimbursement to some of our vendors also. And instead of making payment to vendor A, we have seen that payment goes to vendor B, or there are cases where we have seen that some of the HR employees, they have connived with, let's say, wellness service provider, and they have put up dummy invoices for reimbursement with dummy accounts, definitely, and the money has been, or the accounts have been settled for them, and they have siphoned off money and they have closed the accounts. Now, how an organization can have control over such external frauds or external factors? So for that also, we need to have internally strong SOPs, strong systems in place, where we have proper vendor registration system. So as we discussed, if we are tying up with a vendor for the first time, in fact, we have also experienced that as brokers, and some of the insurance companies also have experienced that when we are dealing with, or doing transactions for premium payment, also for with some of the clients for the first time, we are compelled to fill up the vendor registration form, where we will have to give out details such as not only our bank account, but also the senior, some of the senior management colleagues details, contact details, their names and all. So this only prevents an employee or an external party from even thinking about doing a fraudulent activity, because there is a stringent SOP in place, there is a proper vendor registration system in place. So if a vendor wants to change the account details, they will have to again go through this rigorous process, and it will only make our internal controls tight. So, the 2020 Association of Financial Professionals Payments Fraud and Control Survey report indicated that 81% of the companies were targets of payments fraud last year, that is in uh, 2019, and the second highest percentage since 2009 was business email compromise, that is nothing but email spoofing or social engineering fraud, as we discussed. And with 54% of them experiencing a financial loss due to this business email compromise activities. So we had another manufacturing company, which is a small time pharma company. They had experienced this social engineering or so called business email compromise fraud, where their accounts team, they had received a mail appear to have come from CEO, CFO, CEO of the organization, and it came in at Friday, on Friday late evening. So obviously, when there is a mail coming from MD or CEO of the organization, none of us can think anything else but to swing into action immediately and do the best possible from our end. So the poor account team, also the guy who received this mail, he also got into action, and he made sure that the transaction takes place the very same night. Unfortunately, it wasn't the CEO of that organization, it was a fraudster imposing as CEO of that organization. And when they actually lodged a complaint with Cyber Cell Police, they got to know that it was someone sitting in Philippines who had engineered this email and who had siphoned off money from this organization. So now here we cannot even blame the employee, but only that we can blame the SOP which was supposed to be followed, and the training, lack of training also we can say. So when the junior colleagues in the accounts team, they receive such mails, or even we have seen experience that some of us have also received such mails appear to have come from CEO or CFO of our organization. So the only way out is to provide ample training, educate our clients that do not click on any link which you are not comfortable with, or it's a suspicious email, or it goes to junk, or it is quarantine. Then go back to your IT team, check with them whether you are supposed to click on that link, whether you are supposed to de-quarantine that mail or message, and then only go for it. So there are practices which are being followed by some of the large organizations. They also simulate this phishing attack on the system. So usually it is a quarterly exercise or a half yearly exercise which they do. They simulate phishing attack. They send out mails to the employees, all the employees, and they uh, understand the behavioral pattern of each of these each of these uh, mails. And then since the employees click on that mail, they understand that yes, here is the weakest link. So I will not take much time now, and I will just take 2 minutes to talk about the policy which we are talking about. So how these frauds can be addressed, or how the risk can be mitigated or transferred by way of an insurance policy called commercial crime. This is a comprehensive form of policy which not only takes care of our traditional frauds. It also takes care of any technology driven frauds like funds transfer fraud, or the business email compromise frauds. So there are number of cases where we have seen that claims get settled. Only the condition is that there has to be an FIR lodged by that organization the moment they experience, or the moment they come to know about this internal frauds or external frauds. And the beauty of this policy is that it is always offered on discovery basis. So when we say discovery basis, maybe the organization did not have earlier a policy in place. They have gone in for this policy for the first time in 2022, and they come across a situation where the employee fraud or a fraud has been committed for past 2 years, but it came to surface now. The policy will remain open to invite such claims. So I will hand it over to Shantanu now.
Thank you so much, ma'am. It was very well covered by you. Thank you so much, ma'am. So, ladies and gentlemen, that was Vaishakhi, ma'am, from Mahindra Insurance Brokers Limited. The company itself is one of the few insurance broking companies in India to have been awarded the prestigious ISO 9001-2008 certification for quality management systems. Mahindra Insurance Brokers Limited is committed to providing value to its customers by understanding their insurance needs and risk profiles. Now, without further ado, we would like to bring our next set of speakers for the theme, which talks about the changing. We've just spoken about the changing landscape of white collar crime. And now the next panel discussion talks about the role of executive leadership in preventing internal fraud and employee infidelity. The session will be moderated by Vaishakhi, who's the practice leader, liability and specialty lines with Mahindra Insurance Brokers Limited. Please stay with us for the next 60 seconds and we'll be right back with you. Okay, welcome back, everybody. And our next session is a panel, and we've got an elite group of speakers. We will speak about the role of executive leadership in preventing internal fraud and employee infidelity. Vaishakhi Shah is the practice leader, liability and specialty lines with Mahindra Insurance Brokers Limited, also the moderator for this session. Raghavendra Sir, Senior Vice President Finance with Acolyte Digital. Swaminathan is the Head Corporate Audit and Assurance with Godrej Industries Limited and Associate Companies. Venkat Sir, Chief Finance Officer with Maverick Systems Limited. And Deepak Bansal is the Vice President and Group Head Internal Audit with Somani Impresa Group. Vaishakhi, over to you. Let's have a great discussion, and I highly encourage all the participants to post their questions so that we can address them either during the panel or right after. Have a good one.
Sure. Thanks, Shantanu. So I will just have one question for Mr. Venkatraman. So we understand that the culture of an organization plays a major role in containing or preventing an employee from doing such fraudulent activity. So what are your views on that?
Yeah, I think, see, when you look at employee fraud and infidelity, I think a lot of it is about how, what kind of environment the company is creating and how such incidents are looked at. And typically, when you see most organizations or many organizations have very defined, very well clear laid out policies in terms of how they view integrity, and how it's above board and there is nothing which is compromised. And at least I can tell you from my experience, wherever I've worked, where this is very well articulated and re-emphasized by the leadership team time and again, in every opportunity where you have interactions with employees, or even when you onboard new employees, it has a big impact in terms of how people look at frauds or misappropriation, or even simple things, right? I think even simple things like when employees join, you talk about travel expense claims and how you're expecting people to claim what they actually incur, and not necessarily just say that you incurred something when you're not actually traveled or used a particular mode of transport or whatever, right? So I think all of these things matter, and as these messages gets reinforced consistently, then it becomes easier for employees to relate to. And as and when they identify something which is not normal, or they see something which is not in line with what they've been continuously communicated as company policy, then such things get flagged, and it's easier to pick up those threads and act on those instances of internal fraud. Because as we all know, most often internal frauds are all done, as the name suggests, is people internally involved and creating it, because they know the systems, they know the loopholes, and therefore they work to exploit that. But I think as long as the communication is consistent, it comes from the top, it makes it easier to reinforce that message, and therefore that culture kind of permeates and then helps spread the message.
Yeah, thank you so much. Thank you for such wonderful insight. So, I will move on to Mr. Swaminathan here. So, as we discussed, yes, culture of an organization plays a major role for an employee to even think about any fraudulent activity and also raise an alarm when they come across such suspicious activity. But, compliance also has to play a major role. One is culture, the other one is compliance. So, how through compliance, we can help minimizing these losses.
Yeah. So just to carry on with what Venkat said on the culture, two things are very critical. One, the tone at the top. And the organization's culture also stems from the fact that what is the tone at the top? What does the organization want in terms of actions to be taken in case of a fraud? So the tone at the top, the management's view on how do you treat any fraudulent activity. So that becomes very critical. So once that is set, for example, at Godrej, we have a zero tolerance policy on fraud. So anybody, anything that is even suspicious, we do not want to work with people whose cultural whose actions don't fit into the cultural the integrity and culture of the organization. So that's the tone that gets set. Having said that, the next step on compliance is to also ensure that there is nothing that is going wrong, and therefore you keep on doing regular checks to ensure that things don't go wrong. So either though we nothing goes wrong, nor we commit anything wrong in even in all our actions. So compliance becomes very important, be it compliance to internal policies, compliance to the statute, compliance to processes, compliance to the culture, compliance to the way we work. In Godrej, we call it the Godrej way of doing things, which stems from the fact that the ethical way of doing things, and we set that by examples. So that's how compliance works in good organizations who ensure that integrity is core to their culture.
Absolutely, absolutely. I agree with your point, and that is why we emphasize on the fact that there should be proper, thorough checks and balances for any employee to follow, so that they also know that there is an eye watching over them on their activities.
Absolutely.
So I will move on to Mr. Bensel. Deepak Bansal. So, Deepak, what are the steps and remedial measures to prevent such employee or third party fraud? You being part of an internal audit committee, I'm sure you would have come across such
Yeah,
scenarios, in your experience.
yeah, Vaishakhi. Yeah. Hi, everyone. So today we talked about the culture tone at the top about the fraud, employee frauds, and someone talked about that most of these frauds are germinating from inside the system, the employee triggered fraud. So in terms of fraud prevention, which as per me, from my past 20 years of experience, I must say there is no perfect way of preventing fraud where we can ensure that the fraud cannot happen. These now even the audit that we are doing as a normal audit is a fraud based audit. So we have to see that how the audit and this fraud risk assessments and fraud these indicators go hand in hand, and how we can assess them. So as per me, how we are doing that, these kind of fraud prevention, this what kind of measures. So first of all, I'll talk about this, cyber security. So these days, as Vaishakhi and someone also mentioned, how these scamsters keep on sending some phishing mails where they try to fetch your information, the credentials, and try to then pose as a legitimate customer or a CFO or a CEO and try to ask for the money, and thereby they try to impersonate and get these funds out of the system. So what we are doing as a some measures, we are following a regular cybersecurity audits across the group, across the domains, where we're trying to find out how these vulnerabilities can be detected on time and how we can keep on plugging them and keep on making them in a manner that no one can penetrate in my system from inside or outside. So as a regular thing, so this is one of the activity that has been has been we are doing for the last many years, and making sure, because the IT environment is again changing on a daily. So whatever you do is true as on today. Tomorrow, what new vulnerability come, what new threat will come, that cannot be a thing. So a regular and uh, series of these cybersecurity audits we keep on doing. Second is on the system, SAP or Oracle. So Vaishakhi shared about this Cosmos Bank, where some unauthorized access led to a big, fraud inside the system. So SOD and or segregation of duty is one thing that we keep on checking across my group. So how the accesses has been granted, what is the framework, what is the process under which these accesses are provided, these accesses are reviewed, and they were revoked. So as in any organization, people keep on transferring, role changes keep on happening, one business to another within the business, but these accesses remain with them. In one of my previous cases, we found one person from the accounting team was shifted to the commercial department, but the access to make the payments remained with him, and which actually triggered a major kind of fraud inside the company where he misused those accesses to take out the money. So what we are doing, we have implemented a tool which will actually, see that what kind of access can be provided, role based, T code based, and second, how we do it on regularly basis, where we keep on combing these accesses to make sure there is no unauthorized access or there is no extra authorization being provided to individual which is not required by his role or the KPI. So that is one thing we are doing regularly under a framework that we have done. Third is on the use of a hotline or the ethics helpline. So this I have seen is very, very effective in actually taking out those, whistleblowing complaints, which help us in taking out those, hidden kind of crimes or these kind of fraud that are happening somewhere at the plant level, at office level, or the marketing offices. So these helpline, you see that if it is not there, this platform is not there, people are shying away from sharing these informations to the management, or they didn't find any way or platform to share the information at all. But when we implement this hotline around 9 years back, we found it's like so effective that small things keep on so coming to us. And once people have the confidence, yes, if they file a complaint, it is investigated, actions are taken, and systems are improved. And in my personal experience, when we do audit, we believe the people, we believe the system, so we don't go one step down. But these complaints may make us rethink those kind of processes, and so let us know those gaps which we've never imagined. So this is a very good platform which has helped us a lot in preventing the fraud. One thing that we do Once we find any vulnerability or any gap in any of the plant or any location, we try to replicate it across with immediate effect. It's not that one plant we found a gap, we just stop there and do the correction. But yes, across the group, we do it. Second is on the employee trainings. So one good way is how you keep on spreading the awareness about these frauds, about the actions, about tone at the top. Like so Mr. Swaminathan said that there's a no tolerance policy at Godrej. So which is actually now the requirement of the day, where someone from the top has to keep on saying in the monthly meetings, so business review meeting, plant meetings, that okay, this is what we observe, and any kind of these frauds happening in the company will not be taken lightly. So trainings may, so in trainings, we what we can do, we can have some kind of case studies which we can show them and say that, okay, this is a thing, then this is a kind of as a fraud that many cases we have found that people taking money from the vendors, but when we try to confront them, they will say it's a loan. So what we did, we tightened our code of conduct policy, where we specified any kind of payment coming to you from a vendor or any stakeholders will be deemed as a kickback. So that defense and then goes out. So this is a kind of so awareness we started creating, making some slides on the code of conduct policies, the whistleblowing policies, and about what management is expecting from you. That really helped us in creating that mindset and the pressure on the system. Now, next important aspect is on the fraud triangle. We all know about the fraud triangle, these rationalization, pressure, and opportunities. So these are two, three things which actually create those circumstances which lead to then these fraudulent things. So now how we kind of reduce that opportunity factor. So what we do to reduce that opportunity factor, what we try to sensitize, do a try to segregate so between employees in terms of their roles, and very clearly defined roles, so that people don't get the opportunity in case of overlapping roles or some kind of excesses which actually then give them the opportunity to enter into a fraudulent thing. Second is, by doing some surprise audits, what we try to do by like the depot audits, dealer audits and all. So stock is one thing which I have found that if not reviewed independently frequently, there's a tendency by the CFAs or by our own employees to take it out. In one of the case, we found that when we did a surprise audit of a cement depot, 700 tons out of cement has been dispatched by that CFA to the dealers without without the billing. So that actually incurred a huge loss to the company. But when we did a surprise visit, somehow that into we get into the thing, and we recover that the amount on time. Otherwise, if we don't put that framework in place where we keep on doing these surprise audits on the stocks, there's a tendency, in fact, in all the organizations where I've seen, the stocks are taken out or pilfered. But when you install that system where the person always know that the audit team or some surveillance team can come and check the stocks, so that tendency goes out, because it is unannounced audit and they may go to any place, any area for the audit thing. Similarly, in terms of the marketing spends, what I found is surprise audits really did so wonders. There's a huge marketing spends being budgeted by the companies, where they keep on spending on these wall paintings, displays, or these kind of brand shops and all, where sizable amount of so money goes into these things. So once we started these surprise audits and start going to the markets, meeting the dealers, or going to the places where these ads are kept, again we found many kind of deviation in terms of specification, in terms of quality of that material being used, in terms of the actual quantum of that material being required at the place. Wall painting size 10 by 10, but we found it's like 4 by 4. So that kind of things we started doing, and again it actually let us helped us in minimizing these things to a greater extent. Now, the next, what I talk about is the code of conduct. So, what we did with every audit, every investigation, we tried to, strengthen our code of conduct policy. One example that I gave is about these money coming from vendors to the commercial team, the sourcing teams, where they keep on saying it's a loan that we have taken for education, for some kind of house and all. But we then specifically meant, though we know it's a kickback in the form of a kickback, but then we strengthen the policy which says, okay, any kind of payments are coming to you from the vendor stakeholder, it's a kind of kickback will be treated. So these kind of things we actually try to do, and So as a resultant output, we found that these actually become effective measures. Yes, they cannot prevent the fraud completely. It cannot be made so zero for sure, but yes, minimize the losses that we kind of incurring in the organization. Thank you. You're on mute.
Sorry. So, thank you so much, Deepak, for wonderful insight. Actually, it is important for organizations to have such internal controls and measures in place, so that, as you rightly mentioned, we cannot avoid the risk, but at least to great extent we can mitigate the risk, and that will only give confidence to other employees who are honest enough, and who are forming integral part of the organization. So now, taking clue from this discussion, I would like to ask Mr. Raghavendra that it is very important, as we all discussed about employees. Employees are the biggest and weakest link when it comes to employee frauds, internal or external frauds. So, do you think that background check also plays a major role when we are hiring, or our hiring practices? So how does one should implement hiring practices, so that we do know that this particular employee has come with a clean record and the history?
Yeah, yeah. I mean, that's a wonderful question. I think background checks of employees is very, very vital because it's just not for the reason that you, as a company, would like to be not put at risk. It's also because you have customers whose business you could be putting at risk, which would mean the ramifications are huge, right? So a customer could sue you for, uh, a fraud activity or a confidentiality breach activity caused by one of your employees, right? So you've got to really hire people with the highest level of integrity, which means that you have to do a thorough background check. And I think in the digital world, you know, digital world actually has enabled background checks to getting more and more refined now. Earlier, you literally physically get out to various government offices or colleges, or uh, make a phone call in vain to previous employers to do a reference check. Now digitization has changed a lot of things around background verification, right? So you obviously have many different things that one you would like to do. One is a criminal record check. Another one would be to do a credit check of the employee. You would do their academic checks. You would do their employment verification. You do a reference check. So I think there are multitude of checks that one can do. So depending upon the organization and the sensitivity of its business, you got to undertake the right amount of background checks. You could make it exhaustive, or you could just cut it to the size it should be, right? So but then background verification is a very, very important aspect. um, and 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 considering that your employees are exposed to client environments, client systems, if you do not do a proper background check and have them work on a client location or on a client environment, you are going to put a client at risk, and the client sue you, and you result in you are shutting down your business, right? So uh, now, obviously, when you talk about background verification, um, you do a you do many different ways, right? You could do the very traditional way of calling people in or looking for physical certificates and mark sheets and all of that. Or you could do a lot more things intelligently by way of looking up their PF records, right? Looking up the EPFO records to see if they've been in dual employment, if they have been terminated for wrong reasons. You could look up, Aadhaar today is a universally accepted document, right? So I think you could necessarily look at Aadhaar as the basis for validating somebody's identity. I had heard recently that there were companies that had the same employee hired twice within them, right? So there was an employee who was getting paid twice. He had two employee numbers. So obviously there was no unique identification that the company did not have for its employees, right? So Aadhaar can become a very solid record, ensuring that you know who you are hiring, and you clearly know that that is a person that is working for you, and he's also not doubling up in your company or at yet another company, right? So that's how I would think of a background check to be, Vaishaki.
Yeah, thank you so much. Thank you so much, Mr. Raghavendra. It really helps understand the importance of having thorough background check. So I will quickly move on to Mr. Venkatraman. We all talked about internal controls and employee background check and all, but the technology which we are using, or the kind of technology platforms which are cropping up for payment mode or transactions, for transactions. So do you think technology also plays a major role, and again, how do we use technology to prevent such frauds?
Absolutely, Vishak. I think the fact that there are a lot of new technologies which have come about recently helps address some of these challenges much better than what could have happened in the past. For example, the fact that now you have these AI-based solutions available where anomalies can be deducted in large volumes of data much faster than, let's say, rule-based solutions which typically companies used to put in place, right? You will always have some rules put in place and then that will send out alerts saying that something has been breached or not, versus now you can identify patterns and then detect anomalies in terms of what you would expect to see, or the system would even self-learn and highlight some anomalies which you wouldn't normally look for, or maybe difficult to look for. Particularly, I think this is relevant for companies which have got large volumes of data. It could be retail kind of business, or it could be transaction intensive with a lot of volume of data which is coming in, which can be utilized. And I'm sure the use cases for these are across different aspects of companies' business, right? It could be something as simple as travel expense claims, which employees submit, or it could be to do with uh, customer payments which are coming in, or vendor payments in terms of how you do, or employee related other reimbursements which employees claim. So the use cases are many, and the technology solutions are there. I think we have, while the older rule-based, database-based solutions do work, and it may work in many organizations even now very well, but wherever the volume of data is very high, or you want to experiment to see how these newer age technologies work, where you're able to use uh, pattern detection to identify abnormalities, I think there are enough solutions available today. So I think definitely worthwhile for companies to explore and evaluate some of these solutions.
Sure. Thank you, Mr. Venkat. So I will request Mr. Swaminathan to give us some idea on the role of internal audit committee. Why is it so important to have internal audit committee? So we have also experienced some of our clients, suffering losses or facing such frauds, where the issues were brought to notice to the management by internal audit committee.
Yep. So, the as I said in the earlier discussion also, that the tone at the top is very critical. So, audit committees of the board and internal committees play a very important role in channelizing all these complaints and making sure that they get acted upon. For listed entities like all of us, the audit committee, the complaints go to the audit committee. The audit committee then asks us to do an investigation, through the whistleblower mechanisms, and then you get into details. So the role of the committee is also to kind of independently monitor that every complaint that is received is actually investigated, is brought to a conclusion, and action is taken against all those people who are involved in the crime. Otherwise, without a proper monitoring role, it will become like, the complaints are not getting addressed. So it's important that the internal audit committees look at all the complaints with equal seriousness. In fact, we present to the board every quarter on all the complaints that is received. What corrective actions have we taken? What actions have we taken against employees or outsiders or customers or vendors who have committed the crime? And also important is to also highlight what controls have we implemented or strengthened to ensure that this does not recur. So it's just not that you've identified a fraud and you have taken action. The loop gets over only if the control mechanisms, as Deepak was talking about, the controls are strengthened and it does not recur. If the same set of control failures are noticed and you allow the fraud to perpetrate, year after year, then the control weakness is become very, very significant. And the role of these committees to monitor such violations to ensure that things are getting strengthened is very critical.
Definitely, definitely. Thank you so much. So, again, a question for Deepak. Deepak, we talked about the internal controls, talked about audit committees, and we talked about culture of an organization. But what about vendor registration? So, as we have discussed a couple of examples, we have experienced that vendor registration SOPs, if it is not in place or if there are any challenges in that, then definitely the company might suffer losses. So, what are your views on that?
So Vaishakhi, again, if you ask me, vendor registration process or vendor standard operating procedure guidelines act as one of the deterrent in this frauds and all fraud prevention thing. So no, now, so when we talk about vendor registration SOPs or guidelines, so this is like we're talking about the vendor risk management. So when we say vendor risk management, VRM, it deals about the management monitoring of the fraud or the risk occurring at the third party or the fourth party levels. Now, whenever there's a fraud or a risk happens at these third party levels, we are at a risk, and so it could be across cybersecurity, it could be operational, legal, transactional, financial, any kind of risk. So when we say cybersecurity in terms of vendor thing, if we don't have a framework to somehow assess, so which of vendors we're onboarding, so it is especially important in terms of the partners who are handling our data. It could be vendor data, it could be my IT data, SAP data, cloud-based systems. So at times I've seen in the past companies fail to assess what kind of security measures they are adopting at the vendor side level, and one cyber attack at the client at the vendor side takes down the entire thing. So our business gets to be impacted if the vendor is not secured in terms of its IT systems or the networks. So I'll not talk about the VRM per se on a wider thing, but I'll try to restrict the discussion on the fraud part, that how it should be strengthened, or framework should be created around the vendor SOPs, how it can prevent fraud. So one good example is about this conflict of interest. So many times we have seen that if you try to match the database of my employees and my vendors, you will find certain common strings in terms of mobile numbers, email IDs, some kind of addresses. So it is very important that when we have a framework for vendor onboarding where we screen all these things initially, to make sure that my vendors are not at all related to my employees in any way. Okay. In the past, we have found certain frauds which the basis of which is only these linkages. It could be transporter, it could be service provider, a marketing guy. So what they do in the name of some of their friends, some of them, with their family, some member, they will create that to business, and ultimately running the show themselves in the company, giving them more the business at a higher rate, share of so business is not managed rightly. So all these kind of things keep on happening, and these frauds go into multi crores if not managed at the grassroots level, at the onboarding level. So this is one. Second, what I've seen that onboarding a vendor, so we should have framework which would define what kind of vendor we can onboard. Somehow people start onboarding small so vendors. In the wake of getting work, they start so giving some kickbacks to the person hiring them. So now, as a company, as an organization, we need to decide up to which kind of so vendor kind of so competent vendor we should be so working, so that these kind of things can be eliminated. The third aspect is what we have seen is how these vendors are onboarded. Is there a central sourcing team who is responsible for onboarding all the vendors, or my functions are actually allowed to onboard them? For example, if we say the marketing, so vendors, IT team, so are they onboarding their own so vendors? So this again has to be decided at the company level, the group level, that how this should become. Because we have seen if the user is allowed to onboard the own vendors, there is certainly a risk of conflict which happens, and thereby it ends up into a fraud thing. In the plant level thing, just to give an example, we have seen cases where the person ending up having a nexus with the vendor because he only shortlisted him, and we started so getting spurious bulk material. The quality that we require, okay, was not the same. It was a downgraded supply that was happening because he was getting thicker. The reason is the user of that so material was allowed to onboard his own weapon. So that is one thing that I strongly believe, that it has to be at a central level where the user should not be like only deciding which vendor to onboard. And the fourth is on the what we have seen as a strong so measure, a committee of few people who will be finalizing the vendor after reviewing all the appropriate or the requirements in terms of the vendor selection process that we have. So this SOP or framework that we're talking about should talk about what kind of parameters should be matched. So before we allow any so vendor to be onboarded, and the committee thing kind of significantly eliminate the chances of having some kind of nexus with the vendors per se. So this is what I strongly feel about this, presence of strong vendor SOP in the company to manage these kind of, start to end, processes for the vendor related things.
Yeah, sure. Thanks a lot, Deepak. So now the last question of the session today to Mr. Raghavendran. We all discussed about frauds or controls and preventive mechanisms, but when actually a corporate or an organization suffers such losses because of whatsoever, employee fraud, internal fraud, or external fraud, or employee in connivance with third party, so how should the organization deal with such frauds?
Yeah. No, I think prevention is obviously better than cure. So, all the good
That's
stuff,
true.
that the co-panelists talked about in terms of training the employees on following the code of conduct, or walking the talk, right? So even the leaders of the organization shouldn't abuse the authority to getting an extra benefit of the system, right? So they should really act with integrity, demonstrate the right behavior across the organization, right? The other thing is about having the relevant controls, right? So you, as an organization, should have controls to prevent any sort of a fraudulent activity, and you should absolutely show zero tolerance to matters where people compromise on their integrity, right? Um, Besides this, I think the remedy, even despite if all of this, if an eventuality were to happen, if there was a case of fraud, you would obviously need to remediate it. Uh, you would need to perhaps secure an insurance, and to make sure that the company is not put to severe hardship because of a fraudulent activity. Correct. So, well, insurance, I would think, is still a safety net. Fundamentally, organizations should necessarily focus on having relevant training and controls in place to prevent any such event. But insurance definitely can take away the big pain, financial pain that you will all be put through if there were a fraud that happens in the company.
Yeah, sure. Thank you so much. So, I will thank all the esteemed panelists for giving their wonderful insight on various topics. We could cover most of it about the internal controls, audit committees, or involvement of board, and also what an organization should do when they suffer such frauds or losses. So I will now move on to the question answer session. I could see a few questions here. So one question is about role and importance of or responsibilities of internal auditor. when as an internal auditor, what are the roles and responsibilities an internal auditor will have for a fraud. So I'll request one of you to take up
I
this
think
question.
That's a Deepak Bansal question.
Sorry. Yeah. So Deepak, please.
Yeah, yeah, sure, sure. So when we take in terms of the roles and responsibilities, so I'll talk in terms of the requirement of the statute or the law. So what it talks about. So what is the requirement is like, someone talked about the audit or committee. So it is, our responsibility. So when we receive any so complaint quarterly, we need to report it to the board, the committee, that as to how many so complaints we receive, how many have been resolved, and how many are still pending, along with a small synopsis of what we did as an investigation and what are the actions that we took against the fraud, along with the action plans. I think it's very important from our side that we try to document and try to implement that kind of control measures once we get across a fraudulent situation, and we try to assess and try to find the root cause as to what led to that uh, fraud happening in the organization. Second, so in fact, we have seen that the boards and the directors are also interested in trying to understand that what kind of control measures were not in place per se in the company. It could be a kind of system-based thing. It could be a manual, so process, SOP, DOA, a kind of SOD config, which led to this fraud. So what we feel as an audit, as an audit head. So once we came across a fraud, first of all, how we report it internally, how we report it to the statutory orders, and then when a fraud exceeds a certain amount, it has to be reported to the central government as well. So these are the kind of things that we usually do. One more thing that we try to do, that someone talked about also, that how we keep a control, keep a so kind of tab as to what are the things that keep on happening, and if there is a so kind of trending that we observe, for example in the sourcing frauds or in the commercial frauds, then we need to even so look at the people side, how my structure is there in the so company or the group, which is leading to these frauds happening again and again. The reporting structures, is my reporting structure right? How my monitoring controls are so working in terms of when a certain department or a person is actually so working on a certain thing, is he really doing his job well? Is someone monitoring the job well? So that again we have done in the past, where we actually try to re-engineer the entire process along with the people actions, where we see how we restructure the entire thing or recalibrate it to make sure this doesn't happen. So this is what I have to say around this.
Yeah, I hope that answers the question. I'm moving on to next question. So the question is about the claim process. In case of an eventuality, in case of a loss, what are the chances of the claim getting rejected or getting admissible under the policy, and what are the do's and don'ts? So, as an insurance professional, I would like to take up this question, and then I would request any one of you to support me with whatever are your thoughts. So to talk about a claim, when we have experienced a lot of claims or a lot of claim like circumstances under the policy, such policies we call it as commercial crime policy. So the do's and don'ts and the admissibility of the claim depends a lot more on the SOPs which are being followed internally. So let's take example of a fire incident. We have a fire incident at our manufacturing location. We do not have any firefighting equipments in place. So the first question which a surveyor will throw or pose for the organization would be, what are the preventive measures taken? So similarly for this crime policy also, in fact, that is the criteria, that is the basis to for an insurance company to even offer cover. So when we look at the proposal form will have all the questions related to auditing, accounting practices, the internal controls you have, or the employee check you have, what are the checks and balances you have, whether you have multi-factor authentication in place, how do you manage your fund flow, what are the methodologies you adapt for transactions with your vendors or suppliers. So these are the some of the basic questions which are being asked by the insurance companies before even they could confirm cover, or before even they could offer cover to any organization. So there are cases where we have seen that the senior management themselves are involved. So when such classic case, which is out there in public domain as well, one of the companies, they were on the verge of acquiring a Singapore based company, for which the CEO himself used to travel a lot to Singapore. And one fine day the deal was closed, and there was a communication received by the CEO, from the CEO, and it was received by the accounts team that the deal is done and let's transfer the funds. Now all the documentation, everything was in place. No one would have even thought in their wildest of imagination that such kind of fraud will take place. And here comes a u-turn where we got to know that it's a scam. There is no such entity in place which is the target company. We call it as target company. There is no such target company in place in Singapore. It was all done by CEO with some of the fraudsters. Now here the C level executive or the board members themselves, they are involved. Then definitely it will not allow the policy to pay for such losses, because the person who is in charge, who is authorized to take certain decisions on behalf of the organization, if they get into such fraudulent act, then the policy will not allow to pick up the loss. So do's and don'ts, in simple layman terms, for such kind of losses or for any such eventuality which an organization, god forbid, would face. Do's and don'ts would be to have proper SOPs in place, not only in form of documentation, but also it should be implemented at all the levels, be it at a manufacturing level location, be it at an office level, be it as at an a warehousing location. At all the levels and all the grades, there should be proper SOPs in place. It should be implemented. We should have proper vendor registration system in place. It should be again implemented. There should be periodically training given to the employees about do's and don'ts and how they should take care of the transactions taking place. So these are some of the important points which we should keep it in mind for any eventuality which may face in future. Yeah. So I hope this answers the question. We have another question where, it is again regarding the admissibility of a claim, or whether, I would not say about admissibility of a claim, but what it says that when the email of an higher officer is hacked by an outsider and instructions for fund transfer was sent to the finance staff, and later on he acted on it, and it's a routine practice. So can that staff be considered, or that individual be considered as a fraudulent person? So
Yeah,
uh,
yeah.
yeah.
No, I think I tried to answer that question by saying, that he wouldn't be considered a fraudulent person. At the most, you could charge him for being a little negligent or for not verifying once more before he actioned on it, right? Besides, I think the organization is to be blamed for two reasons. One is to letting the CEO's email be so vulnerable that it can be hacked. Second, the fact that it doesn't have adequate controls, that there is no maker checker control in the organization. One person could straight away take an instruction and complete the transaction. He speaks of weak internal controls. So,
Yeah, so even when it comes to insurance claim also, we have seen some of such email spoofing or social engineering related claims where the mail appear to have come from CEO, CFO, or one of the vendors or suppliers. Now the person in question here is the person who relied on this communication which he has received. So, as Mr. Raghavendra highlighted, it is not an individual's responsibility; it is the responsibility at organization level to inform or to have proper, trainings provided, proper processes in place, so that if I am part of an accounts team and I am receiving a mail from my CEO or the so-called CEO, the imposter, It's not that I have to, immediately act on it. I will definitely go to my higher ups. I will seek an approval from them. If they are also in sync with me, then only I will be able to transfer funds. So here, the SOPs, the processes, the training, the internal controls, maker checker balances, all this, are actually important, rather than penalizing that individual who relied on the information which he has received. So any other questions we have here?
Uh, yes, I'll try and pick a few from the other tab. I think the questions have been answered, but let's see if we can pick this one up.
Okay.
Well, it's talking about how well the panel actually went today. So, thank you very much to all the speakers. Please address in detail as to how the claim process, if events happen, and what are the chances the claim gets rejected, do's and don'ts. I think this is more for you, ma'am. So, if you could take this one on.
Yeah, actually, we have addressed this question, but since we have still some time with us, I would like to elaborate on the policy terms, conditions, and the do's and don'ts as per the policy per se. So, as we discussed, this commercial crime policy is all about employee infidelity, whether they are acting fraudulently in their own capacity or in connivance with third party. And it is far more comprehensive as compared to fidelity guarantee policy, because most of the times when we go and discuss about this policy, we are being just informed that okay, we have a fidelity guarantee policy in place for which we are paying hardly any premium, and we are good to go with that. But that is not the case. As we are advancing and as we are relying more on technology platforms for doing such transactions, it is imperative for us to think outside the box and also think around, look around. Last 2 years, 2.5 years of pandemic, we have seen majority of the claims falling under, one is cyber, the other one is commercial crime. Why? Because there is hybrid work culture. The controls to certain extent are loose, because beyond a point, how can you have control when a person is sitting remotely in a in his hometown or somewhere else? So we have seen that there is steep rise in claim. And the differentiator between a fidelity guarantee policy and commercial crime is, fidelity guarantee policy is all about hard cash money, which we used to have traditionally. But the commercial crime policy is all about technology driven crime. It also takes care of cash in transit, cash on premises. It also takes care of forged documents. So I have another classic case where an employee, a courier employee, used to pick up checks day in day out from one particular organization. He was very smart. What he did, he understood that what is the kind of quantum of what is the quantum which is mentioned on checks. So what he did, he cloned the checkbook. He also practiced the authorized signatories signatures, and he started defrauding the company. And it came to notice of the internal audit committee only after a year or so, because that external party, the courier person, was very smart. He started with a small amount, let's say 100, 500,000, like that. He started slowly embezzling funds, and it did not come to anybody's notice until the internal audit committee could see a normal pattern, a behavioral pattern, in terms of checks being deposited, and funds being encashed, or it being encashed by one particular source. So these are some of the tactics which we have seen some of the external or internal parties they follow. And coming to another part where this policy is far more comprehensive and better compared to fidelity guarantee policy. Fidelity guarantee policy is confined to, let's say, a particular territory and jurisdiction. Let's say for India, it is India territory jurisdiction. Whereas a fraud like Cosmos Bank, or a funds transfer or a computer fraud can take place, or a social engineering fraud can take place from any part of the globe today, because of the globalization and because of the kind of network environment which we are into today. So this policy will offer cover outside India as well. So if we have subsidiaries or entities, or if we have transactions outside India with our clients, advisable to go for this policy. So, if we have any other question, or I can continue with this,
Uh, Ma'am, I think you can continue. We don't seem to have any further questions.
Yeah, sure. So, coming back to the differentiator, so again, fidelity policy will have a per employee cap, cadre wise, or it will have cadre wise or grade wise per employee cap. Here, we do not have in commercial crime policy, we do not have any such cap. We have cover available up to the policy limit for all the employees, be it a peon, be it a senior management, or be it mid management person. If that person is involved in a fraud, and if that loss, because of that fraud, the organization has suffered a massive loss, then up to the policy limit, that loss can be covered. And another advantage of this policy, as we were discussing initially in my keynote session, that this is on a discovery basis. Unless and until the fraud comes to the surface, and if it is not known to anybody internally within the system, within the organization, the claim would be tenable under the policy, unlike a fidelity guarantee policy where you have a discovery period of 12 months or so. Here again, we do not have any cap on the number of employees to be covered. Even the policy can be extended to cover contractual employees. Many a times we have come across situations where some of the organizations have contractual employees working on their behalf at the client side or internally as well. So how do you have control over this contractual employees? Definitely you would have a contract with your contractor where you would insist on them to have proper background check and all. But when that employee or group of employees, contractual employees, are working on your location, you will have to follow such practices, and the policy can be extended to cover that. So I can see a question coming in here: how a small enterprise can afford such internal audit or even the IT firewalls or protection measures if compared to large organization? In those situations, MSME will not be able to take such insurance cover to mitigate the risk of commercial crime. So again, I think I can take up that question, and I would request, Deepak or Mr. Raghavendra or Mr. Venkat to take up this question. So what happens that, as we discussed, it's not only about having fancy firewalls or having high level security mechanisms in place. Many a times we have seen and that MSME companies, they do come forward for such insurances, and it is all about the auditing and accounting practices which we follow internally. Not necessarily that insurance company will require you to have internal audit committee in place, or having a robust security framework in place, as long as we are able to showcase that we have some mechanisms internally as a preventive measure, and we have SOPs in place where we insist on the employees, and there is an insistence from the management also to follow such SOPs in place. The insurance companies are open to look at offering cover. So any inputs from any of other panelists?
Yeah,
So
I can take
Vaishakhi,
that.
yeah, okay, okay, please go, Mr.
I can take
Venkat.
that. I think, see, I think while the point may be valid to an extent, but I think the fact that it is an MSME, it is a function of that particular company's business and the complexities which will drive the kind of covers and what they want, right? So it is not necessary that it has to be as elaborate or intricate as what a larger company will
Complex.
do. So therefore, I think it's question of where do they see potential risk, given that they're looking at a crime, commercial crime policy, and therefore put in control. So if it is not a very IT sensitive organization, or their business is such that they have only limited folks who are going to use the IT systems, maybe then the controls which will require would be different versus, let's say, some other part of the business which may need additional controls. So I think it is very custom specific to the organization. But yeah, your point is valid. But I think sometimes it cannot be a one fit or fit size kind of a solution. It needs to be customized for the specifics of the business.
Yeah. So there is another question which I can see that, please address what are the exclusions, especially the insurance is subject matter of solicitation. How this works when claims happen, especially these are unknown events with advent of technologies. So very valid question. Insurance is all about unknown events or unknown, exposures. So if we were knowing that this employee is going to be the key to fraud or any fraudulent activity, that will not be definitely covered under the policy. So to addressing your question about exclusions, as we discussed, any policy will come with certain set of exclusions. So the first major exclusion for this policy is that, of course, it is it is imperative that this is a discovery based policy, but there are cases where internally, maybe within the finance team or compliance team, people were aware of such fraudulent activity happening, but they did not pay attention to it, and it only created a dent in form of a massive loss. So in such situations, the policy will have a rider or an exclusion that it should be not known. If there is a circumstance or a claim like situation which is already known to the organization, then the insurance companies would want to know what are the preventive measures you have taken as an organization as a whole. So when is prior acts in form of known acts, known matter of losses or circumstances would not be covered. As we discussed, another exclusion is about senior management involvement. The moment there is principal, director, or C-level executives which are involved, so that will not be covered under the policy. Talking about other exclusions in the policies, these are other standard exclusions. Let's say profit margins. If the profit margins are affected or there is inventory loss, now for a manufacturing company, there will be day-to-day inventory which will be counted. Now, if there are smaller losses of inventories here and there, that is not going to be covered under the policy. Then the policy will also have an exclusion for war and terrorism related exposure, which is not much applicable here. The policy will also have kidnap and ransom related exclusion, because at nowadays the insurance companies have opened up and started offering extortion cover, cyber extortion cover under the crime policy for a small sublimit. Otherwise, any kidnap, extortion, cyber extortion related exposure will not be covered here. Loss of data, that will not be covered here. So again, as Mr. Venkat mentioned, as we have customized philosophy internally for internal controls for each and every organization, these are also quite tailor made policies. There are certain set of exclusions which are fixed, there are certain set of exclusions which are being put in by the insurance companies only looking at the exposures. So I could see another question also. What is the claim settlement ratio against the fidelity or crime insurance in India? So again, it is predominantly driven by the kind of documentation or the kind of evidences which we are able to produce to insurance companies. So in case of claim like situation, the insurance companies will have the list of queries, list of documentation which will be required. At times we have seen that the organizations, they fail to produce such documents, and because of that the claim gets into jeopardy, or the claim settlement is prolonged. But otherwise, when we talk about claim settlement ratio in fidelity or crime insurance in India, we have seen that out of, let's say, 100 cases, we have seen that close to 60-70% of the cases get resolved under the policy, because when you have proper SOP in place, when you have proper controls in place, Third, we are able to produce all such evidences in the case of eventualities. And fourth, last but not the least, whether we are taking any action against such, miscreants. So there are, we have come across some cases where an employee was found guilty of doing such fraud. There was no action taken by the management. That employee was still roaming freely in the system. He was still allowed to do transactions, authorized to do transactions. Now the insurance company, if the same employee or group of employees get into another such fraud, and because of which the organization suffers loss, the insurance company is going to question. So last but not the least, there should be actions taken against those employees who are being found guilty of doing such fraud. There should be either they should be given notices, or they should be given, they should be even terminated. And the proof of termination, proof of such actions taken against such employees is actually important for claim settlement. I can see another question: is final report from court mandatory to get the claim settled? Yes, it is important. It is not mandatory, but the insurance companies at times do insist on having final report from police, because on the basis of initial FIR they will start the claim process. But when they are about to settle the claim, they would expect the organization to produce final report from the police. So, Shantanu, do we have any other questions here?
Ma'am, we are slightly over the time that we had requested for, so I think that's about what we can answer today in the evening. I'd like to thank you, ma'am. Thank you so much for putting this together. I think as a moderator, you asked some very pertinent questions, and thank you to all our speakers. I'd like to begin by thanking Raghavendra sir, Swaminathan sir, Venkat sir, Deepak sir. Thank you so much for contributing to this panel discussion. I think the magnitude of such acts of crime is so immense that a single scam can itself, cause irreparable loss and damage. So I think this is a topic which is rarely discussed, and we should probably curate more themes around this. A commercial insurance policy, as ma'am was suggesting, offers a comprehensive cover and protection against employee infidelity, and also covers the organization against losses incurred due to any such crime. On that note, thank you so much to all our attendees. I saw 110 people who logged in for this session, making it worth everyone's while and effort. And towards the end, I'd like to thank Mahindra Insurance Brokers Limited, which has put together this event, the content, and the speakers together for this event. Thank you very
Thank you
much,
so
ladies and
much.
gentlemen. Have a good
Thank
evening.
you.
Thank you, everybody. Thank you,
Thank
everybody.
you. Thank you, everyone.
Thank
Thanks.
you.
Thank you.
Yeah,
Bye.
bye. Bye.